This ratio is in everything natural. We have this area right here to consider a buy. That's a really good reverse Fibonacci. I like the fact that this is a major area. Probability of it retracing at this area is even higher. That 11 is right in my sweet spot. So if it comes down to that level, I'm going to consider buying there. Let's look at American Express. I got an alarm and I don't know if there's anything. Let me see if American Express had anything going on with it. And then we'll look at that Trump stock in a second. Let's see if there's money to be made on AMEX. So as always, guys, when I do the analysis on any asset, I want to look and see the overall picture of that market. As you can see, we're all the way here. We go back. I mean, this low point here was March of 2009, all the way here. So we can see what's going on in that market. So it's always good. This is the 1 week chart. Just to be clear, each candle represents what happened in 1 week. When you squish it, this is what you get. Sometimes people get confused and they think it's a white line. No, it only appears white because it's around the candle. You've got white around it. So yeah, so there you have it. So now that we have this information, where would I take my first Fibonacci?
Lower lows.
Okay, so I could go all the way here, right, from the beginning of time, or I could even go here. Let's go all the way from the beginning of time, when the market was in the 1970s. And when I'm looking at this, I'm looking and I'm going from the low to the high, right, left to right. And I want to see how the market reacted. And like I'm looking at this and I'm going, that's interesting. It came to the 23, but did not turn around. And I'm looking at this here, and I'm seeing this was pretty close to touching it. Same here. So what if I was to move this to this point, the Fibonacci? And I can see when I do this, I have this area and this area that are pretty close to it. So anyway, it's not conclusive. I'll just put it back to where it was. But these are the things that I like to look at. I don't just put the lines. Keep an eye on what the market has done. And the fact that it did not touch that area, there is a possibility this could come back down to touch it. So I'm going to keep that in mind, that is a possibility. It came close to it, it jumped up. And you'll see this quite often. It doesn't mean, however, that because it's pretty close enough, the market could end up going up from here. So that's one possibility. But this humble Fibonacci retracement tool gives you a lot of information. And all I did, I just went from the bottom to the top. And now these numbers just gives me an idea. And these numbers just represents the percent. So 0.118, it just means the market to this level came down 11% from here, from this high. This 23, if the market comes down to that, it came down 23% and so on. And then you have the 50, if the market came all the way down, that's the mid part between here and here. That's the middle right here. And that's the 50%. So these numbers are not anything weird that we have here on this Fibonacci, but they're Fibonacci numbers. And remember, we spoke about 0.618. The previous number of that Fibonacci sequence divided by the present number will always give you 0.618. Not in the earlier numbers, but when you start going like from 8 divided by 13, 13 divided by 21, and so on. So you'll see what I mean. And then this gives you this. The opposite of the 0.68 is the 0.32, meaning 1 minus 0.618 equals 0.382. So all of these numbers are derived from this one number right here. And you'll see some people have other numbers that they've created. My partner uses Fibonacci's. He'll take Fibonacci's from here to here, and he'll use those lines. That's why I'm always saying, guys, I want you to study this. Do not try to necessarily learn it, because what if you were to take a Fibonacci from here to there and then use these lines? Well, why not? You will get good at using these lines if you start to see something that makes sense. Just like I said, my partner uses, I think it's the weirdest thing, but you got to see, he gets hits and he'll use these smaller lines in between to try and predict where the market is going to, right, when it comes down. I don't fully understand it, but it absolutely works for for him, and it blows my mind that he's able to use it. I have another partner who uses the 45% Fibonacci line. I don't fully understand it, but it works for him. I've seen it. I've seen him trade off of that. So make this your own, guys. You want to study this. As I said, you're not here to come and learn the stuff. Study it and see how you can make this, because it is the God ratio. This ratio is in everything natural. It's in our body. Who we consider attractive, we would all agree if they had the perfect Fibonacci face, meaning the space between the eyes as opposed to the thickness of the head, the thickness of the lip as opposed to the width of the mouth, and all that stuff. We would all agree, whether it's a white person, a black person, a Chinese person, or anything else, we would all agree that's an attractive person because it's in our DNA. It's in our double helix DNA. And as mentioned, it's in the emotions of the market. That's why this works. So don't just put the Fibonacci on and say, okay, my job is done. You've put that. We want to see if we can find some areas of confluence. And so we would go and use another Fibonacci. Like I said, I had an alarm triggered. I can't remember. It was this week. I didn't bother looking at it until now. So maybe it's right here. Maybe I was expecting it to come down. Let's see if there's other lines of confluence here. And if there is, then that would be exciting. Then I would consider a trade, $250 on AMEX if it comes down. So I can look at all of these points here as potential points to take the Fibonacci to see if I get any areas of confluence. And I will discount them as I'm putting them if they're just messing up the graph. And if I don't see a trade, I just walk away. I'm going to take one from here. One of the main reasons why I'll take one from here is because I like the fact that it's right next to a 61% Fibonacci line. So I'm going to take one from there. I'm also going to take one from here because it's very close to this 88% Fibonacci line. It's not right or wrong, but let's just see what happens. The fact that we're always waiting for 3 confirmations minimum, we can afford to look at the market to see if there's anything that makes sense to us. And if we don't get an area of confluence, well, then we may just want to discount it. For now, I'll leave that there, but I don't see any lines that overlap except all the way here. Can American Express fall all the way to 76.88? It could, but that would be pretty crazy if it did. That would be like World War III starting, which would be a good place to take that trade if it did fall all the way down because of war. I don't believe we're ever going to see World War III. I think that's done and over with. That's just my opinion. But there's a lot of fear around that, and that's fine. But that's an area right here that I would consider if there was ever one of these. Because remember, as Warren Buffett says, when you want to be greedy when people are fearful, and you want to be fearful when people are greedy. So you want to be buying when people are selling, and you want to be selling when people are buying. It's so simple. But the problem is most people don't know how to do technical analysis. And that's why it's so important to put the work in, put the 15 minutes in before you decide. And I might not see a trade here on American Express. And if I don't, that's fine. No harm. It took me 15 minutes or even less. I mean, I say 15 minutes. Here it's taking me half an hour because I'm talking as I'm doing it. So let's look at another Fibonacci. Let's try this one here, see if there's anything. And I can see that right here, I've got a 38. And I think that's why I may have put that alarm. I've got this 23 and this 38. I like the fact that this 23 is above. So the market came past the 23. If this market comes back down and passes this 23, chances are it's coming here. If the market comes back down and breaks this pink line. Right now, the market might be hard to see it. The market is there. If the market comes there and goes back up, that's one possibility. But if it breaks that 23 again, chances are it's coming here. So that might be an opportunity for shorting the stock. to this area here. So that's one possibility for us to consider. So that's, like I said, when we do the analysis, you want to think it through. So we've got 2 confirmations in this area here. We also have 2 confirmations on this line. So could the market come all the way here? Yeah, we could end up taking a trade here and taking a loss on this line. But if it does come down here, would be a great place to consider taking a trade. And I like the fact that this is a major area, meaning this was right from the beginning of time, to the ultimate high, and it retrace. And like I said, these lines are very important, especially when you've got important Fibonacci. This is an important Fibonacci because it talks about the whole market. So that's why I'm liking these 2 areas. That's why I'm liking the 23 and the 38. So if it does decide to come to that area, there's a probability that it could hit that area and turn around. But we want to see if we can get some other confirmations. So I'm going to go in. I'll put another Fibonacci, but I'm going to zoom in afterwards. Let's see if I put a Fibonacci from here, what happens. Let me move this one over. So now I'm looking at this and it overlaps right here, which is great. That's beautiful. And it overlaps here with this older Fibonacci. So I'm liking American Express if the market comes down. There's a lot of opportunity to get paid, right? So you can see the overlap here. You can see the overlap here, right? We spoke about that one already. But with this new Fibonacci that I took from here, you can also see this overlap here if the market comes down to that line. And then, of course, we have this overlap here. So let's zoom in. I'm not going to worry about these ones all the way here yet because the market is playing in this area. So for me, I'm not going to put my energy into this area. All of these are great to keep an eye on. And, I can always put an alarm right here. I'll put an alarm by AMEX at 2:03. So why don't I do that? That alert by AMEX. So I have an alarm there. So that's something to consider. I can put one there. This one, the alarm got triggered. And once it gets triggered, it normally goes away. I'm going to put it back here again. I'm going to put an alarm for buy AMEX at 250. And this is all based on what? What could make this not be a viable place to trade? What could change? If the market goes up, then this alarm or this area is no longer valid. None of these areas are no longer valid. I'll have new areas. It might be wise for me to say if the market stays below 326. So with my alarm, I could say if stays below 326. When I look at it, I can look at my technical analysis and say, okay, it's still below 326. What was I seeing? And these Fibonacci's I would do very quickly and I would say, okay, that's why I like this area there. But keep in mind, like I said, this is anchored at the top, right? All the Fibonacci's are anchored at the top because we are looking to go down. Now, if we were coming down, it would be the opposite, right? So when you're doing your Fibonacci's, just keep that in mind. And it will make sense as you guys watch the videos and you come and hang out with me every Wednesday and Saturday. So now I'm going to zoom in and see if I can get another confirmation. We have 2 confirmations in that area there. And like I said, I'm not going to worry about the other areas because this one is imminent. This one could happen on Monday. So I want to be ready for it. So I'm going to go and zoom in to, we're at the 1 week. Let's go to the 1 day, see if we see anything. Okay. I'm going to go to the 2 hours chart. So now I have no idea why this is not showing up. That's weird. This is the high, but it doesn't show up. Yeah, you see? That's weird. I don't know if that was a spike or whatever, but it's not showing up. Must be a glitch or something. But anyway, nonetheless, let's look at this. So we have this area right here that we're considering $250 to consider a buy, and it's very close to it. So for me, I still like this area if it comes down. And if I take a Fibonacci from here, the previous low to the high, and I'm going to put it here because I think that's just a glitch there or something. But I can always go and look at American Express and find out what's the highest American Express has ever been. But for now, just so you guys understand what I'm doing here, I've got this 88 right in that area, that 88%. So I now have my 3 confirmations. I now have 3 lines in a tight area for me to consider a trade if this market comes down there. And if it does, that would be a great area to consider a buy. And your stop loss, or if the market starts to go against you by just a little bit, and you can always go back in the future to see where there's an area where the market. And right here, we have a memory line. So if I put that memory line right there at 247, it's very simple. I would get in at, let's say, maybe 250 or 249 area. And then I would, and if I zoom in even more, I can get an even tighter area for me to consider taking that trade. For instance, I could do a reverse fib from that top there to this double bottom and see if I can find anything that will give me. And when I do this, I have that 11% right in that area there. So I can maybe use something like that when it's time to take that trade to get even a 4th confirmation. But right now, I have a nice tight area. I've got my stop loss. And the next thing is I want to see if there's enough profit to be made. And like I said, I'm going to assume the market and there. I'm not sure what this is, but if I have to change it, I will. But for the sake of time, since we already started out there, let's just assume the market ended there. If I am going to take this trade on Monday, I would have to investigate what the heck happened there, why it's not showing up on the other chart. So, by the way, if someone can look into it and see what was the highest AMEX ever went to, maybe on Yahoo Finance, please have a look and let me know if, in fact, it was 345 or was it 326. Let me know how high AMEX has ever been, because that would have been the highest point ever while I'm doing this. But for now, let's assume this is the area. I'm going to take a Fibonacci from there to where I think the market could go. And if I think it's going to go there, well, this is how much money is available. I can go from here to here, which is about $10. Conservative.
It says here, American Express, March 12th was 326.27. That's a 52-week high.
Yeah.
Oh, excellent. Okay, good. So good. So yeah, so this is nonsense. Okay, good. We're doing it right. Excellent. So getting back to this here, we now know where we will more than likely take profits. So if I'm looking to take profit here, maybe I bought like 4 contracts and maybe I take 2 contracts here and then I let it ride to the next level and take maybe 1 contract there. So I'm out 3 contracts and I could let the other contract run higher depending on how much time I have with that option. So this is how you would play stocks. For me, I love options. For those of you that want to own the stock, that's great, but I'm not interested in owning the stock because you can make a lot more money when you take advantage of leverage and buying the contract without owning the stock. Needless to say that it doesn't matter. The technical analysis is what we're focusing on, how to do it. So what did we do with this stock? Let's recap. I started with the big picture, right? I went the 1 week to get a sense what's going on. I did some Fibonacci's and saw that 2 lines was on top of each other, area of confluence. I zoomed in. I did another Fibonacci, and that 88 is right in that area. And with that 88 being right in that area, I had 3 confirmations. The second thing I did, I looked at where could I put my stop loss. So I looked back in the past to see if I saw anything, and I saw that I had a memory line right here that the market could spike down and then go back up. So I didn't want to be spiked out or get out of the trade. But if it goes below that point, I'm out. That's the area for me. And then you stick to your game plan. Win or lose, you stick to your plan. This is exactly what happened with me on DJT. It went against me. I said, okay, I'm out. And it was a good call because it really went against me. With regards to the final point, where do you take profit and risk to reward? There's enough money, right? If this goes up $10, that's excellent money for me, okay? If this goes up $10. So, and you want to know exactly where to get out. Remember, we trade levels to levels, levels to levels, and these are the levels. So that's how you would do your technical analysis. Now, there are other tools, of course, that you could use. And if you went, for instance, let's zoom into the 5-minute chart, we could use other information like this area here. Let's say the market was to turn around there, right? It doesn't go any higher. We could then use, and I'm on the 5-minute chart, I could then maybe use the reverse fib. So I start there and I anchor it there. Remember what I said last week, when you have an area that's been hit twice, this area becomes really strong. That's a really good reverse Fibonacci. So if I go there and I do that reverse fib, and let's say I put that 38 right there, that 11 is bang on. I don't know if it's going to turn around here, but right now that 11 is right in my sweet spot. So I am loving this trade, and I would definitely consider that. And the 23 is on the upper level as well. So between 250 and 247, I've got a nice zone here that I can consider. So I think I'm on the right track with this trade if it does come down.
So sorry, Amr, at that level, that's where you'd want to do a buy.
Yeah, somewhere in this
think
level
it's gonna
here.
reverse, right? Yeah.
Yeah, somewhere in this, because I'm getting all these amazing lines. So somewhere in that area, I would consider a buy. But remember, if it goes below 247.50, let's say, you got to get out. Take a small loss. You got to get out. It just didn't do what you expected it to do. But the probability of this market turning around in this area is really high. It might jump around a little bit, but it's really high that this market, if it comes back down. Now,
So playing hypothetical story, Amr, I didn't mean to interrupt there. But say it did hit that spot, you'd want to do another fib from there to figure out where your exit point is going to be at that level.
No, we already did our exit point.
Oh, okay.
We already did our homework. This is this is our exit point right here.
Right here. Okay.
Yeah, no, I do it ahead of time, right here. This is where you want to put maybe you move your stop loss inwards, or you mentally say, if it comes down to that area, I'm out. You know what I mean? I'm not going to.
Right. I guess. Yeah. Oh, sorry. I guess this is where sometimes running a challenge with my 21 trades. So you know how you said it's going to go down to that level and then it may go up and down a bit?
Yeah.
Right? At what point would you want to move your stop loss up? Because sometimes, like, if you move
until
it up,
the 11, until the 11.
Until the 11,
touch it
right.
Until the 11. Do not touch your stop loss until it gets to the 11. If it stomps you out, so be it. It wasn't a good trade. You didn't do a good technical analysis, or the market will do whatever the market wants to do, and there's nothing we can do about it. Right. But when you're doing the 21 trades, because it's only 2-tick trades, it's easy to get to 2 ticks, especially if you have a good line. It'll just go boop and jump up very quickly. But when you're taking these bigger trades, right, this is your 11%, remember? Okay, this is your profit. Now you can go to the 23, which is this one here. Okay, I should probably change the color. Let me change the color here. So this is the profit Fibonacci, the blue one. This is the 0, or where I think the market might come to approximately. And then you will adjust this, because what if the market didn't come to that area? Maybe it came to this area. So you would adjust it. And then this would be where you would get out, or this here, or this there. But you trade levels to levels.